How many of you have heard the term impact investing? Okay, quite a few. How many of you have actually made an impact investment? Okay, not as many. Some people say impact investing is a lot like high school sex. Everyone is talking about it. Very few people are actually doing it. And those who are doing it aren't doing it all that well. While there is some truth to that, it's increasingly changing. Some really big players have been moving into the impact investing space. This past year in 2015, the largest global asset manager, BlackRock, worth $4.7 trillion, moved into the impact investing space. The largest private equity fund, Bain Capital, as well announced it was moving in. Last year, the Pope embraced impact investing as a meaningful solution to poverty alleviation. Impact investing is about making investments with the intention to create positive social and environmental impact. It's about doing well and doing good. I work at the intersection of social change and investment markets, two areas that until recently were like oil and water. They did not mix. The prevailing thinking was that businesses exist to maximize profit, and real social change could not happen as long as profit was the motivating factor. I fundamentally disagreed with this, and I, along with several others, have dedicated my career to looking at how we can bridge the gap between social impact and business, how we can create worlds where social and economic inclusivity, environmental resilience, and political stability were core. I began my journey in college, looking at the space between sectors and looking at things like social enterprise and venture philanthropy and what is today considered impact investing. I was interested in how innovators across nonprofit, business, and government were creating meaningful solutions to things like pollution and homelessness. After college, I got a job in the real world, management consulting. And the more my time is spent in spreadsheets and PowerPoints, the more I longed to be part of the real world. I began to travel. And the more that I traveled and I immersed myself in the lives of nomadic herders in Kenya, in healthcare workers in Haiti, in microfinance banks in India, the more I realized that we could do a lot more. I became good at bridging the worlds of bleeding heart idealists and hard-nosed pragmatists, mostly because I have both of those voices inside my own head. In 2010, I started working at the World Economic Forum, the organization that puts on the annual meeting in Davos with CEOs, heads of state, and celebrities every year. It was perfect. I got to work on big problems such as climate change and youth unemployment with hard-nosed business leaders and seasoned government officials. I was responsible for working with social entrepreneurs across sub-Saharan Africa and Latin America and helping them scale their impact to things like access to healthcare and education and energy. But the market for scaling impact was far from perfect. I saw an opportunity to bring impact investing from the margins to the mainstream. And impact investing very much was on the margins, with less than $8 billion committed in the context of tens of trillions of global assets under management globally. Impact investing was less than 0.1% of investment markets. Yet, despite the small scale, I thought the opportunity was big. So I asked myself, what could we do? First thing I wanted to do was to look at the data. And several leading business schools had been looking at the data as well. Two professors from Harvard Business School conducted a study, and they said if you had invested $1 in 1990 and in two portfolios, one portfolio with companies with high sustainability factors and one portfolio of companies with low sustainability factors, by 2010, that $1 would have been worth $15.4 in the low sustainability portfolio and $22.6 in the high sustainability portfolio. Likewise, professors at Wharton Business School have looked at the private equity market and shown that if you're investing for impact, you can actually generate market rate returns and sometimes above market rate returns. So impact and financial returns don't have to be at odds with each other. You can target for social impact and financial returns. You can do well and do good. So I asked myself, if impact investing makes sense, how do we get the people who are sitting on the sidelines, the people with the resources and the influence to make impact investments, to join? How do we get them off the bench and onto the dance floor? And I thought to myself, I have this incredible platform of Davos, but I probably did not have more than 2 hours of their time. And one thing we know is that it doesn't work so well when you lecture anyone, world leaders especially, about doing something that they're not already doing and should be doing. So I had to find a creative way. And I ended up taking a cue from high school and created games that hedge fund managers and bank CEOs would want to play at Davos. Einstein once said, "Games are the most elevated form of investigation." Games allow people to suspend assumptions, open up mindsets, and lean into new possibilities. And investors are quite competitive. For them, there's only one option in a game, and that is to win. And to win in these games, they would have to become masters of the topic of impact investing. And in these games, only the investors who targeted for the highest social impact and financial returns were able to win. We designed a game that was based off of a real-life impact investment in Angola, in post-conflict Angola, where the land was completely ravished and people were living in extreme poverty. These investors were each divided up into teams and had an allotment of cash, and they needed to figure out how to rebuild the food and agricultural industry. The decisions they made, what quality of inputs, chicken feed and fertilizers, whether to use a microcredit scheme, whether to provide veterinary services to the farmers, made a difference. And those investors who intentionally targeted for impact ended up winning. And this game showed that you can create virtuous cycles of impact and financial returns. Higher productivity leads to higher incomes. Better nourished farmers lead to higher productivity. And with higher incomes, you have more economic development, which creates the landscape in the future for better investment opportunities. Each year, for 4 years, we created different games that addressed affordable housing and public sanitation and childhood obesity. Through these games, we were able to take impact investing from the margins and into the mainstream. The games were a means that these individuals, that these investors could explore the possibility of impact investing. The games were not Trojan horses to convert them to impact investors, but rather a test kitchen where the chefs of financial markets could use the ingredient of social impact. The impact investing games became some of the most successful games at Davos, or the most successful sessions at Davos. But the success wasn't contained to that room. When managing partners of private equity funds started to reach out for advice about how to develop an impact strategy, and chief investment officers started to announce that they were investing in green bonds, I knew we were having an impact on the impact investing market. Right now, there's approximately $100 billion committed to the impact investing market, which is a big transformation. And it's good, but it's not good enough. We need to make impact integrated into the way that we make investment decisions. A few months ago, and after 5 years at the World Economic Forum, I joined a new nonprofit called The Impact. The Impact is dedicated to increasing the probability and accelerating the pace of addressing big societal and environmental problems through impact investing. It's a pact among investors who commit to make more impact investments and to do it more effectively. It was founded by a group of visionary philanthropists and individuals. One of them, Justin Rockefeller, has said, "The world's social and environmental problems affect all of us. And the increasing interconnectedness of these problems mean that local problems have global implications and vice versa. Another one of our co-founders, Liesl Pritzker-Simmons, says, "How I invest my money has moral consequences." What we're seeing is a lot more wealth holders are interested in seeing how they can invest for impact, how their investments can create the world that they want to live in. And this is exciting. We're at a unique moment in history. Over the next 30 years, $59 trillion will transfer to the new generations. And when wealth transfers, historically, from one generation to the next, 60% of that wealth is lost by the second generation and 90% by the third generation. At the same time, millennials increasingly say social impact is important. 72% of them think that businesses should create social impact. So the paradigm that businesses exist to maximize profit and real social change cannot happen as long as profit is a motivating factor is an obsolete worldview. My hope is that we can start to move trillions of dollars into impact investing. Over the short term, we're going to be able to move trillions of dollars from 1% exposure to impact to 2% to 5%. And that's going to be huge and hugely impactful. You may all be thinking, I don't have enough commas in my bank account to do something like this. And the truth is, I don't either. And for as long as I keep working in nonprofits, I probably never will. But that doesn't mean that we're powerless. Markets are powerful because they move with consumer preferences. We have power and influence through the products we purchase every day, through the stocks we hold in our 401ks. And pension funds are worth some $20 trillion now. That's a whole lot of market power. Surprisingly, though, banks and asset managers say there's not enough demand for socially responsible products today. So it's few and far between when we want to make socially responsible investments out of our 401k. But we can be that demand. We can make that change. We're at an incredible point in history. The intersection of social change and investment markets really is a phenomenal opportunity. My hope is that over the next decade, social and environmental factors will become equally as important as financial factors when making investment decisions. And I ask you, what impact do you want your investments to create in the world? Thank you.